at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, Where Do We Investors Stand? It is Friday, November the 21st, 2025. Now, those of you that know me, that I do not like to use bad language, vulgar language that is, but yesterday I would describe as being rude and disgusting. The reversals that took place yesterday were significant. They certainly felt that way, but again, I was reminded on my way out of the office that those that felt more pain than others should be reminded that they have done well in recent months, because essentially the stocks that have done the best kind of experienced the largest reversals and so forth. Anyway, let's get into it. I kind of messed up this chart here with a little bit. I just wanted to circle off on the two main indices. We'll call that Toronto and the US market. You can see that really we've got intermediate and long-term uptrends that continue to be in place. But again, obviously we've got some short-term pressure, which is most of this first column. Pause your video player at any time to look more closely at the data. Let's look at the left side here. We got the S&P 500. We had that biggest bar against here earlier, I believe in September there, and essentially now we followed through. That was a pretty big bar. Now, just to be clear, I don't actually call yesterday the biggest bar against. Why not? Well, the biggest bar against to me is an inflection point that takes us from after the period of rise, let's say, after a period of increase and strong trend, it is a very strong move the wrong way. Now, the move yesterday was essentially a move off of already an oversold market. And what I mean by that is that, the market had already been coming down here over the course of the last several weeks, and essentially yesterday is really just a reversal. So it's also a very big bar, no doubt about it, but it's not what I actually call the biggest bar against. On the right side, we got the Toronto stock market still holding above that same bar here from actually I think it's October 10th now that I think about it. But the bottom line is Toronto market has been outperforming all year long, and again that starts to change some of the metrics on a bigger picture basis. Here's the mid caps in Toronto. These definitely have my attention. If you look at the left side, you can see the Toronto mid caps definitely in a strong uptrend, outperforming the Toronto market itself absolutely, and relatively I should say. And on the right side, you can see here that the US mid caps, very, very different story, right? This is a weekly chart. This is now a lower high. Again, mid caps and small caps for that matter have been really, for the most part, very weak relative to the large cap space. Let's look at the big three assets. We'll call it gold, Bitcoin, and in this case, we're going to use stocks, but we use the Toronto stock market since it's up the most. You can see the year-to-date returns, right? Gold is up 53.8%. Bitcoin is now down 12.3%, and Toronto stocks are up almost 21%. I've overlaid just the 3-year returns just because time frame matters, right? So as investors, we can sit here and we can look at prices and headlines that talk about what happened, yesterday or today, or we can look at last month, last quarter, last year, the last 5 years, and so forth. And I think it's very important to understand that we all operate on different time frames, but it is not wise to get caught looking at short-term time frames that can impact the longer-term time frame that perhaps your finances are resting on. I think this is really important. So again, I've just overlaid 3 years just to remind ourselves the US stock market rather, has been quite a bit stronger than the Toronto market. It has been in the case for a very long time. But again, obviously year to date, it has changed a little bit, and you can see gold and Bitcoin there on a 3-year basis. Let's look at some market timing models. I have several models I like to use. This is a risk off model that I use. Essentially, it's a long short fund by Desjardins, DANC in Toronto. Essentially, when the DANC starts to outperform the US stock market, essentially we have a period of risk off that's happening. You can see I've plotted the prior vertical lines that take place, and you can see they have certainly prefaced some of the weakness that has taken place. So right now we are in a bearish setup from this perspective, meaning the DANC is starting to outperform. Now, we had a very short-term signal take place earlier this week. So the VIX has risen. You can see here's the VIX in red in the middle panel, but you can see the VIX is actually still below here where we were just again earlier this fall. And you can see that the market, there's that biggest bar against, again, prior, right? And now yesterday's selling. You can see we're kind of at the same line. So we're what I now call into the zone, meaning the VIX is at an elevated level. Now we need to see the VIX settle. That's volatility, and you start to see the panic go away. And that's going to be something important to see from an equity standpoint. Let's look at the DCA-ATR model. This is a way of looking again at bigger picture volatility, of trying to understand the markets. In this case, we've got that vertical lines there that are plotted when the long-term ATR turns upwards. And you could see, and again, I can show you back in history, this has done a very, very good job of marking big picture tops in stock markets. Now, again, you can see this has not turned, but the short term, which is just, again, a less time frame or kind of higher frequency time frame, has turned. And so again, that gives us a little bit of a warning and certainly allows us to be cautious cautionary, but at the same time, again, the big picture model has not turned. You can see we got some declining breadth has been taking place. We're back to 47% of stocks over the 200-day average. Not ideal look, but again, I think that, remember, there's a lot of information that goes into making investment decisions, and I think it's fair to point out that I can't show you everything that goes into how I perceive the market over the course of the last kind of 7 or 8 charts. So look at advanced decline lines. They are declining now on all time frames. Small caps being the weakest, but they've been weak for a long time, and the large caps there, we could call that a lower low. So look at, again, highs, lows, right? So when more stocks are making lows than highs, that means that breadth, again, is another example of weakening. But again, for a market to go up, we want to see more stocks making highs. This is the Russell 1000. In the bottom panel, you can see that because we're below that horizontal line, we are seeing more lows than highs. And so again, now as a correction or a sell-off comes to an end, we're going to want to see that kind of finish, and we're going to want to see that behavior shift back in the same way that it did earlier this year. You can see here's April actually on the left side of your screen. The sell-off that took place was obviously very significant. You can see those lows, they started in the same type of manner, but they got very significant. And so that emphasizes how strong and impactful a correction can be at the time, and we're just going to continue to pay attention to the data. So I want to show you a few stocks here that are familiar to our clients, and again, you can see here, one of them is different. So the goal in portfolio management, certainly as I see it, certainly as trend followers as well, is we want to invest in stocks that are going up. And we want to invest in stocks that are going up. I actually prefer them when they're going up, both absolutely and relatively. So in the bottom panel, we could call those the relative trends. And those are the plots of the versus the S&P 500. So again, what we've got on the left side, Broadcom has been a very strong stock. And again, this is weekly unfinished charts, but to yesterday, right? I don't see a high there. I don't see a peak, certainly not on the weekly chart. This is a very strong outperformance. Taiwan Semiconductor has been a very, very strong stock as well. Again, does not look like a peak to me. Very strong outperformance. And you can see Descartes Systems, I'm showing this as a dual listed stock from both Toronto and trades in the US. This is different. This is a stock that has a long history of outperforming, but you can see that all year long it has been trending downwards. We have lower lows, we have lower highs. So when I sell a position on behalf of a client, I want to prevent this from happening, where we end up holding essentially the bag as a trend turns from up to down. Again, there's a lot of kind of inputs that go into making these types of decisions, but I just wanted to give you an example. It's a stock we certainly owned last year. Let's just look at the biggest stock in the world. That is NVIDIA, of course, which reported earnings on Wednesday night, which is where yesterday really became more impactful. Yesterday, the NVIDIA, it opened strongly. It was up by, I think, 4 to 5% on the open. You can see the earnings results here. They made 60% year-on-year growth in earnings and 62% on a sales basis. This is the weekly chart, right? So NVIDIA reversed. I think it was off, I want to say 7% from its highs, meaning somebody who paid the high of the day was down 7% or so. And then again, that's the reversal, really harsh reversals that I was speaking of. But when you look at this weekly chart, I think you're going to have to do a lot of convincing, and I'm not sure what you're going to do to try to convince me that this is a peak. This certainly does not look like a peak. Again, remember, the yesterday reversal is buried within this weekly candlestick up here. So again, that 34-week line, I think, does a very good job of tracking the big picture trend of stocks. But at the bottom line is NVIDIA, the largest stock in the market, certainly does not look like it peaked. But again, lots of stocks have. That's beside the point. Let's finish off with Sector Watch here. We got a little longer today. I apologize for that. You can see there's the gold miners on the bottom of the week. At the same time, they are in a consistent short, medium, and long-term uptrend based on moving averages. You can see the creep here on the intermediate term basis. There definitely is some intermediate term, false, which is indicating a negative trend condition for a 20-period moving average over the 50, and everything in between. I hope this has been helpful. Please follow me on X. I'm at David Cox RJ. Thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially in Sync in Waterloo, Canada.